Welcome back, everybody. Chris Naugle, your host of the Real Estate Money School, going at it again. And, I appreciate all of you joining me. I got a great guest today. We're going to talk about everything from books to coffee to all sorts of stuff, but we won't leave real estate and money out. I promise you that. My guest today is Dave Holman from Holman Homes. He's got an awesome story, a lot of things to talk about and unpack, but some of them, he's got 97 rentals. He's from Maine. He's got some cool stories about South America and a bookstore that was called The Spitting Llama. We're going to get into that one. We're going to talk about his first major investment that he did at age 27. We're going to talk about some of the books that he's written. And most importantly, folks, we're going to talk about Dave's journey, because that's what this is all about. It's great that he's successful. It's great that he's got all these rentals. But what's important, folks, is the journey of how we got there. Because this podcast, the Real Estate Money School, is all about your journey. It's about your journey to becoming a rebel banker. And on that journey, you sometimes have to realize the hard facts of life. You have to go through the trials and tribulations. But the most important thing you're going to be doing on your journey to becoming a rebel banker is you're going to get knowledge. You're here watching this podcast, getting educated, getting knowledge, trying to find some golden nuggets. But here's the problem. You see, you can come on all the podcasts you want, go on all the YouTube videos you want. You can do all that, and you can do nothing with that knowledge, which is a shame. The person that said knowledge is power, that person was wrong, because it's the application of knowledge that's the real power. And that's what I want all of you to do. I want all of you to apply the knowledge you get here. Find one, maybe two things in today's podcast and take action on it. And I'm going to give you another thing. If I told you I'm willing to give you something for free, you'd get excited. But what if you had to do something to get that thing for free? What if you had to take action on something? Would you do it? Well, we're going to put that to the test. I'm going to give you a copy of my book for free, Mapping Out the Millionaire Mystery. Matter of fact, you can have a copy of either one of my books. You can have Mapping Out the Millionaire Mystery or the Private Money Guide for free. Just pay the shipping to your door, or if you want the ebook, let us know. And all you need to do is go to my website, chrisnaugle.com, and click on the free book offer. Now, I know that sounds so simple, but the question will be is how many of you actually do that? That will be the interesting thing. So I want you to focus on taking action on the knowledge you get, and we're going to dive into it. So Dave, welcome to the show.
Thanks for having me, Chris. Excited to be here.
For sure. So real quick, I kind of did a real quick thing about what you do, but tell everybody, what do you do today? What does your business look like today?
Yep. I have three different areas that I work on. I'm a commercial broker, so I help clients buy and sell investment property and real estate in Maine. I own a property management company called Katahdin Property Management, which, 90% of that company's business is focusing on the rental units that I've acquired with investors. I only own one building myself. I own 14 others with investors. Started out with simple partnerships and kind of worked my way up to doing syndications, group investments, where I now have 23 people. We just bought a $3.3 million building together in Maine, and we're looking for the next thing.
That's awesome. All right. Well, you didn't just get where you're at just by sheer luck, and you didn't just get there because you had a silver spoon in your mouth. And I don't think you did from your story, but let's do this. Let's take my audience back in time. Let's go back to where this all began. What was your life like before real estate, and how did you end up here? Walk us through the whole story. Don't leave out any of those dirty, nitty-gritty stories that you got. And also, let's throw in, how did you end up figuring the money part out to do what you do today?
Absolutely. Great question. So I grew up middle class in Maine, went to public high school, rural area, and loved it. Went out to college in Minnesota, where I started learning about real estate through an architecture class called Building the Eco House. And it was all about green design, insulation, and very hands-on, very applied. So we made different wall types and tested their R values of insulation, learned a lot of the techniques of green building. And for a while I thought, I'm going to be an architect, and learn to do green roofs and all these different neat technologies. And but I had studied abroad in Bolivia, and I had met a young woman down there. We had started dating, and at the end of college, I was like, that was a pretty good relationship. I better go back and figure out, just make sure where that was ending. I don't want to leave loose ends out there, in life. So my heart took me back down to Bolivia, no return ticket. I just was going to see what was going to happen. And we traveled around together in South America, just backpacking, busing, through dirty, dusty places, saw a lot of beautiful things, and realized there's no stores around here that help travelers at all. You really have to go in the market and find stuff, or, you can go to a store that'll have books, but it won't have anything else that you might need, like a map or, different things like that. So we went back to her home city of Cochabamba in Bolivia and just decided, hey, we want to, keep being together. We need to earn some money together. Let's try this out. I had a little bit of savings, and so I started buying merchandise. We opened up a little store, and it went well enough that we decided to open up a second store far away from our home city. So 10-hour bus ride up on Lake Titicaca, at 10 or 12,000 feet of elevation. And we opened a store there, and it went really well because it's a tourist destination, a lot of people coming through, instant success. And then we needed one in the middle, in the capital city of La Paz. So before I knew it, we had 3 different stores, 10 employees, 100 or 200 sales a day. And, things were moving really quickly. And I had only taken one econ class in my whole life. I thought money was for greedy people, and I didn't have much of a concept, of what I was doing beyond, buy low, sell high. And I think that's the basis of any successful business. So I was doing the right things, but I didn't have the training. So when we got visas, came back to the US in 2009, there had been this thing called the recession that I wasn't really a part of. I was down in Bolivia, but decided it's a good time to go back to school. I decided to get my MBA, learn all about accounting, finance, the things that I was, missing at that time. And right at the end of that program, my best friend from Carleton College, who did become an architect, unlike me, came back to me and said, Dave, I'm working with these developers. They're building a 100-unit building here in Minneapolis, and we're doing a friends and family only, like, private investment offering. Would you be interested? I just inherited a little bit of savings again, and I thought, I'm probably just going to waste this money if I don't invest it. So I'll give it a try. And this return of 20% a year seems like crazy, maybe a scam, but it can't be. I trust this guy with my life. So, even if it's only half as good as they think it is, I'll give it a shot. So I put down $20,000 and they, dug a big hole in the ground in the Twin Cities and built an apartment building in it. And before you knew it, and 18 months later, I was getting quarterly distributions. I was getting quarterly newsletters, learning all about it. They did a refinance that gave us 40% of our money back. And then in 2018, it sold for like a 340%, profit. So it was a very good experience, a good way to get started as a passive investor. And I learned about what syndication, this grouping of friends and family money to do a really big project with a lot of efficiencies can do. So it was in the back of my mind. So in 2013, I partnered with family, and we just bought a single family rental house in a local town called Yarmouth. That went well. So when my wife got pregnant in 2015, this is my Bolivian girlfriend, now wife, that's when reality really hits home for folks who may have been contented otherwise. I was working for nonprofits, earning, enough money to pay the bills, but not, saving anything for a child's college education or something like that. And I wanted to invest in something that I could make a difference in the world. And I thought, I can make my own house as green as I want with solar panels and heat pumps and all these, insulation. But that's not going to make a big difference on the planet. But if I can do that to hundreds, if not thousands of other houses by both doing it, locally, by being a landlord, and by teaching other people how to make money and profits by increasing energy efficiency, reducing your utility bills that you, the landlord, are paying, that can be huge. So that's kind of the mission I'm on now. I bought a 3-unit building after the 2 single families. Then I went up to 9-unit apartment buildings, and pretty quickly then shifted over a lot to mixed use and commercial, because it's just a niche that a lot of people are ignoring and not interested in. And that's great. More opportunity to find good deals. So we just did a 26,000 square foot building right on the main street of a college town in Brunswick, Maine. And really excited about that, and probably doing bigger kind of workforce housing developments in the future.
That's great. So when you were kind of catching your stride after that first rental that you and your family did, was it all personal money, family money? Like, how did the money piece come into that?
Yeah, it's a great question. I had no money. All I had was passion and interest. And my parents had retirement savings, and they had enough that they were willing to risk some, and they wanted to diversify, because like many Americans, they were 100% traditional, where it was all in the stock market. It was all IRA, stock market kind of money. It was all paper assets, basically. And they saw what happened in the recession. Their portfolio went down just like everyone else's, and it was very painful. But what they're very good at, and what I really admire in investors, is they are true buy and holders, and they just do not sell. And usually if you can, ride out the storms, you can do very well, whether it's paper assets like stocks or in real estate, as we know. So I went to them, and they knew I'd been studying this, listening to podcasts like yours every day, reading books, going out with brokers, looking at things. And we basically made a deal where if I did all the work, they would put in the money and we would split the deal. And it had to be a good enough deal so that splitting it would still give each of us a good, cash on cash rate of return. I was pretty naive. And so, we did this single family house and it went okay. We didn't lose money on it, and it's been cash flowing, but barely, $100 a month maybe of profit. However, it was in a great school district, so it's appreciated, by about $100,000 since we bought it, in 2013. So that's been a good investment so far, and it was with, their partnership.
That's awesome. So at what point did you go from, using family's money, kind of doing that little after little, and then all of a sudden you jumped into this next realm where you're buying these bigger multifamilies? So how did you figure that out? How did you learn how to do that? Because it's one thing when you borrow from your family, you're like, Mom, Dad, I'm not going to lose your money. I don't think we're going to try this. And then all of a sudden, the first one goes good, maybe the second one, but eventually everybody hits their scalability, like the ability where they can't scale with their current resources. Where did that happen for you?
Exactly. Great question. So it happened when I had a great problem to have, which is that I had two great deals at once. One of them was 17 units, two different apartment buildings from the same seller, and the other was 9 units from one seller. My family and I partnered to buy the 17, but they were topped out. That for the whole year. They're not going to, spend more than that on one investment and just want to see how it goes. And there was this other one that was like, oh, I know this is a good deal. I know this is a great property. I know we can make a lot of money here. And I was talking about it over a beer with a former boss, actually. And he was like, well, Dave, if it's a good investment, let's just buy it. I was like, but I don't have the money, Rick. I only have like 10 or so grand that I could put in this, and we need like 110. He's like, yeah, I'll do it. Let's partner. And so we split that one. I was a minority stakeholder, but I got a little extra kicker for, again, doing all the work. So we bought that as just, a partnership where he had plenty of capital to spare. And he, wanted to be invested in local real estate. He thought it was cool. And, we partnered on that. So that got me started in like, all right, I'm outside just the family sphere. And then it was my biggest failure project that got me involved with other investors. And I say failure laughingly because it's one of the best investment decisions I've made to pull out of this project. But I found this incredible building on the main street of the downtown of Brunswick, Maine. Awesome building, beautiful 4-story brick, 1800s building. Frederick Douglass gave speeches there in the Grand Hall, and just incredible. And they only wanted 900 grand for it. And so I said, I know this is going to get snapped up quickly. I'll pay you $1 million. And I put it under contract. And I was like, I know this is a great investment. This building, it's got to be worth more than $1 million. And maybe it needs 100 or 200 grand of work inside to kind of fix it up, but I'm sure we can figure it out. I just went on gut instinct. And lo and behold, this building had been vacant for decades in the upper floors. Only the first story, retail spaces were usable. All the rest, knob and tube wiring, asbestos tiles, lead paint. Just every possible hazard you could have. And it hadn't been touched in decades. No infrastructure, no plumbing. And so but we could use historic tax credits. And I learned all about that, got very far down the rabbit hole, got an architect, planners, designers. I had, friends. I sent out the opportunity to say, hey, I think we got this great opportunity. We could, use historic tax credits to renovate this building. And, and I'm seeing a pretty good profit at the end. But the further we got into it, the more the costs were just like getting really real. And it was going to take probably closer to $3 million to renovate this $1 million building. And the tax credits give you a great, discount. But even so, everything had to go right for me to make investors whole and for this to work. And so when we came to the time when my earnest money was going to go hard, I just didn't feel right about taking that kind of gamble with other people's hard-earned savings and money. And I said, I love this building. My heart loves it, but my brain is telling me, this really could be, it'll take 2 years to earn you a pretty low return, basically. A much worse return than I was getting on the current investments I had already done, which were far simpler. So I decided to back out and, kind of tail between my legs. But I said, look, guys, I'm not going to take your money because I don't want to lose it. And I think that, all those investors have now put down much more money with me in other projects because they know that I'm willing to back out. I'm willing to say no. Even if I love a deal with my heart, I'm willing to use my brain and say, yeah, but it's too risky. That's not the level of risk. If I had millions in the bank, I would have bought that building all day long and renovated it to the amazing thing it should be. But that's the kind of person it takes, is someone who has a very high risk tolerance. Doesn't, oh, what's $100,000 extra overrun cost? No big deal. That wasn't me. Still not me. So I had to let it go.
So I like some things you said, and folks, like those of you listening, like there's some good key takeaways there. So he got emotionally attached to that property, loved it. It was, something he really loved, really wanted the property, raised the capital to buy this property based on his current assumptions of what it would take to buy it and renovate it. Did his due diligence. As he gets into his due diligence, he starts uncovering some things that are going to cost a lot more. If any of you have ever done an asbestos remediation, you already know, oh my God. Been there, done that, don't ever want to do that. But then knob and tube on top of that and all these other things, it's just that big overrun. Now, could that deal have worked? Possibly. But you know what? He wasn't comfortable dealing with other people's money and potentially putting additional risks on that. Even though he really wanted the deal, he backed out, which is a hard thing to do. If any of you have ever had to back out of a deal, it doesn't make you feel good. You feel like you gave up. You feel like you quit. You feel like you lost. Like you really feel bad when you do that. But you know what? His investors didn't look at it that way, because an investor is going to work with you for a lot of reasons. Since this is the Real Estate Money School, let's get into some sentiment about money. When he was able to raise money on trust. The people he went to were people that trusted him. Okay, so that's the very first thing. You want to start raising money. That's what you're going to have to do. You're going to have to get people, typically your primary circle of people that already know and trust you. Once you get past the trust, the second thing you got to do is you're going to have to solve their problem. So he was able to take this deal and solve these people's problems. Now, some of these people, their problem was they wanted to make more money than they were now. Some of these people wanted the opportunity of what this deal could bring. So he was solving other people's problems in doing what he was doing. And when he then made the decision to back out, he also demonstrated one of the most important things that comes along with people trusting him is people don't just care about, they care about your trust. They care about the return on their investment, you solving their problem, but they also care about you returning their capital. Okay, so that's a key thing. And he demonstrated that it was more important that these people got the return of their capital than it was for him to take the risk to get a return of or a return on their capital. Those are some important key takeaways. And you always have to remember, if you're going to be a good steward of someone else's money, be the person that can walk away from the deal. Be the person that can be strong enough to look at the deal and say, you know what? It's not what I thought. And even though everybody's already committed and I'm ready to go and I can pull the trigger tomorrow, you walk away, which costs you money, costs your investors money, and puts your reputation on the line. But as you saw, that reputation was put on the line in the right way. And those people probably doubled down on their investments because now that trust level went up even higher. So I commend you for doing that. That's a hard thing to do.
Yeah, thanks. All the losses were myself and my family who had put up the due diligence money. So we didn't make investors lose anything on it, and we've gotten it back tenfold over in subsequent deals. So I think it is really important to always, if you're working with investors, put them first, make them whole. Don't lose their money. It's okay if your return isn't quite as juicy as you thought it was. It's not okay when you're losing your shirt. And I have a good friend who, he won't do any investments because the first syndication he did has gone very poorly. And there was, the sponsor, I don't know if fraud is the right word, but did not follow through on the plan they had and has squandered the money, and it's in a lawsuit, and it's just a really sad situation. So it's so important to, far more important than the deal, the location, the asset class, like none of that matters compared to the integrity of the sponsors.
Yeah, you're absolutely right.
With good, honest, hardworking people who care about their reputation and have the experience and knowledge and integrity, you'll be fine. In the end, like they will do right by you and your money. Whereas if you're just going with someone who is in it for themselves and about money, and they maybe have other issues going on in their lives, that can be very dicey. So it's important to really know who you're doing business with.
Yeah, no, I think there's a lot to that. And, I'm in the money space, so I see a lot of these things. And I know syndications, although the models sound, it's good, it's approved, you're not really doing anything wrong, but there are risky drivers out there. And I know that the syndication model, much like the trust deed model from back in the day, and even the fund, the fund model, they're all looked at by the government, called the SEC. And some of the syndication models out there are now being audited by the SEC for these things. So when you're doing this and you're looking at, these different models, just get with don't get with the risky drivers, right? Do your due diligence. Make sure you're looking at this with with a magnifying glass sometimes. But really, it just comes down to the main person. Do you trust them? Do they have a track history? Have they been a good steward of other people's money? And do they have references that you can check on? If all those things check out and you look it up and everything looks good, well, you've done your due diligence. I think too many people blindly leap in, take the advice of somebody else without doing their own due diligence. And I think that's a mistake. I really do. Because there's definitely a lot going on out there and the markets are crazy. So let's segue a little bit. Let's segue to current times. So much happening. Real estate's at an all-time high. Interest rates are at an all-time low. The stock market, if you believe that, and what it's doing right now is real, then, well, we got to have another discussion. But anyway, crazy times. What does the future look like for your business and what you're doing? What steps are you taking? What things are you looking at in light of all this craziness happening in the world today?
Yeah, right after this conversation, I'm having my first talk with my first employee, executive assistant that we've hired. And we hired a part-time property manager in addition to my current partner who's been managing property as well. So we're expanding, kind of slowly and steadily. I'm not looking to go exponential, but it's exciting times for us because, when March hit, I've been following COVID since January and very concerned about it. From a podcast, I listened to Macro Voices. They brought on Dr. Chris Martinson, who was freaking out about it in January. And so I should have been more prepared. Everyone should have, but we don't always listen to the scientists. It's like the horror movie, it's like, oh, it's far away. So it hits in March and, any landlord is thinking the sky might actually be falling here. It could be like all my tenants going to stop paying rent. And if you're a landlord in New York or San Francisco, you may actually be living that. But here in Maine, the market it's done the exact opposite of what we were expecting. So we got low to the ground. We focused on operations. Anyone who was a dime late on rent, check in on them. And we actually did, wellness calls to every single tenant. We picked up the phone and said, hey, sir, how are you doing? Just checking in on you, seeing if you're being affected, by the pandemic. This was in, March, April when, we were all in lockdown and people really appreciated that personal touch. And lo and behold, we only had to make payment plans with a handful of tenants. And they very quickly got back on their feet because they were getting unemployment or they found a new job or things worked out for them. And now the demand is absolutely off the charts for residential housing in Maine. There's kind of this flight to the rural areas and suburbs, to good school districts. It was already a hot market pre-COVID, and now it's kind of crazy. So this area where I operate has been very positively impacted, but I don't see, rainbows and unicorns in the future. And I think anyone who thinks it's a V-shaped recovery is like, pick a different letter.
Yeah, that's for sure.
It's going to be some letters and words and numbers and symbols, I think 2021 is going to be one of the hardest years in this country's recent history. I really do. And I hate to say that because I'm an optimist.
I 100% agree.
And I don't think 2022 is going to be easy either.
Nope. I think maybe not even 2023.
Right. I think it's going to be mid-decade or later when the effects of this are starting to feel like ancient history. But I think it's going to make the Great Recession already, look like small fries, and it already has in some ways. But a lot depends on the government. Today we are in a more government-controlled economy than ever before. So, we have the highest default and, sort of delinquency rate of residential mortgages. 20% of residential mortgages have either had delayed payments or reduced payments, because they can't make them with their banks. Yet foreclosures, and evictions are low. They're lower than pre-COVID, and that's all relating to bank forbearance, regulation, government intervention. And so I don't think anyone can say they know what's going to happen in 2021 because it will be up to whatever administration is voted in. And, you know, my own little plug will be for any listener who hasn't voted yet. I don't care who you vote for, go vote.
Exactly.
You know, your voice needs to be heard. You know, I think that's very important civic duty. That I've lived in countries where voting doesn't really work, and there's not real democracy. You know, we've got something special, and it's a use it or lose it kind of thing. So go vote. That's my little political plug, and I'll end it there.
I think it's good, and I'm the same way. And you know, it's sick to see what's happening in this country with such a divided country. And you know, we're all in the States, we all live in America, and we know that we're here because of freedom, and a lot of sacrifices were made for that freedom. Yet, like, if freedom is why we're here, then everybody is free to do and vote for whom they want. But yet that doesn't seem to be the way that this country is operating right now. You got to pick a side. And I just don't love that. I hate it. And I think that's going to have huge ripple effects into the future. What they look like, I don't know. I totally agree with you. I mean, coming from the financial advisory world, the Wall Street world, I'll tell you right now, this isn't a V-shape. And if you think this is a V-shaped recovery, well, go get your Christmas presents early. Let's just keep it that way. And also, I think it's going to be a very interesting couple of years after this. I think there's going to be a lot of opportunity for those that are ready, but for those that buried their head in the sand at the beginning of this and just pretended this is just going to, you know, be a flyby and be over before you know it, you are going to get left in the dust in a way you've never, ever been left in the dust. You have to prepare for this. You have to get ready for this. And you have to understand that this isn't going to be easy. And, you know, there was a book, one of my good friends, he was on my podcast before he passed, Stefan Arnio. He wrote a book, Hard Times Create Strong Men. We are entering a decade, maybe, or whatever period of time of hard times. These are going to be the times that shape you, that's times that create strong men and women. And, you know, you just got to get ready for it. But I don't want to scare you. I want you to understand that these hard times, quote unquote, are going to be times where you can literally catapult your life, your finances, your wealth, your business, if you just get behind and get ready for it. So I think I love what you said that. I really do. And, you know, hey, it's a week away from the election and one of the craziest times I've ever lived in. So why not hit that a little bit? Because, you know, this will be recorded and listened to for years and years and years. So this will be interesting to kind of come back and listen to this. Because I'll tell you, a year ago, I did a couple podcasts with some people, and we were talking about the markets and predicting this kind of fallout. We had no idea it was going to be COVID. We had no idea the political unrest was going to be this, but we knew something was coming. And it's always fun to go back and listen. So what are you doing right now, or what do you think you're going to be doing as this whole thing takes hold?
Yeah, I'm staying low to the ground. I'm not going to get too fancy or far out over my skis. I think residential is the kind of obvious safer play. I mean, nothing's safe, but, you know, commercial, especially malls, large, big box stores, you know, any asset class that was struggling pre-COVID and hasn't been turbocharged by the pandemic is really got a target on its back. You know, I would not want to be owning large, big box, you know, retail kind of operations right now. I think those are going to have to get repurposed, a lot of them. And that whole asset class is going to be tough. Large office, medium office is going to be really tough as businesses realize, hey, this Zoom thing works and our employees can be just as productive, if not more productive at home.
I think more productive, actually.
Yeah. Absolutely. The phone's not ringing. Nobody's, you know, walking in your door with their cup of coffee to chat about football, which is pros and cons, but they're not, you know, so for people that can focus, you know, at home, that 8 hours can actually be spent mostly working. So I think it's a great kind of digital leap that we have taken. We've packed 10 or 20 years of digitization into 10 months, basically. And there's no going back. So, you know, I owned a lot of office space. And a good story, one of our recent investments was an 18,000 square foot office building with one anchor tenant on the second floor and the first floor vacant. And I bought it because I realized the anchor tenant can pay all the bills and break even. And everyone else thought they were going to leave, and we got them to sign a 7-year lease. And so I was trying to find a tenant in March and April for 9,000 square feet of office space. And guess how many inquiries we got? You know, it looks like an O and it's a 0. But I had a lot of small offices in this market, and those tenants were hanging on. I mean, they were still doing, they would go into their office and do telehealth because they don't want their bed and their cat in the background of their professional, you know, persona. And they were willing to pay $500 a month to keep their office. And so it kind of scratched my head. I was like, could we just rent out all these offices of this whole floor as single offices, and threw it up on Craigslist, just got humble and said, yeah, let's do it. Sure enough, we're now fully leased, and we're actually building more offices in some of the open workspaces, because I think the days of 30 or 40 people all sitting next to each other at desks on the phone, even plexiglass, like, man, this stuff is in the air, it's aerosols, COVID, the vaccine, it's not going to be given to young, healthy people, for a long time yet. So we got some time before people are comfortable congregating indoors like that. And, let's make them private offices. They'll rent for a higher price and go that way. So we're looking at opportunities where people are mispricing their assets. I would love to buy hotels in downtown areas and convert them to like micro unit housing, workforce housing. So that, is something we're looking at for Portland, Maine. I was just talking today with a friend about doing a high-end mobile home park. And we're not going to call it a mobile home park. We're going to call it workforce housing, high density, high efficiency workforce housing. But, we can get 100 units onto a few acres of land, in this sort of mixed use industrial residential park in Brunswick. And we're looking at that because there's a huge affordability crisis in the United States. Towns aren't permitting mobile home parks anymore. I can't build units and sell them for less than $200,000. Maybe you can build them for 100, but it's pretty tough to make those economics work, for working people. So I think we got to get creative. We got to see new ways to help people, afford to live where, they want to be and can work and live and play.
Yeah, I think that's huge. I think affordable housing is a massive problem in this country. I think there's a big lack of it. And I think a lot of the people that, in the last few years, I've seen it big here in New York, in Buffalo, is these high-end loft apartments. I think those are going to be the first ones to struggle. And I think your Class Bs, are going to be the ones that really excel. And I also think we need to focus on affordable living and affordable housing, because there's a big lack of that. So I think you're on the right direction there, and taking existing uses and converting them into things like that, I think is even smarter. Mobile home parks, I'm a huge fan of. And, even though I don't own any, but I think they're just one of the greatest things you can start looking at. And I love the repurposing and renaming of it, because a lot of people look at mobile home, oh, I would never live there. Oh, high density workforce housing community. That sounds good, honey. Let's go look. Different. All it is mindset, folks, just changing the perception of what they see. So with that, as we kind of wrap this episode up, let's talk a little bit about, you got a couple books, right? One of them, Coffee Smuggler.
Yes.
let's talk about that one.
It is the true story of Gabriel Declue, a French soldier who was stationed in Martinique in the Caribbean. And he saw the plantation economy working very well there. He got sent back to France and thought to himself, coffee would go great in Martinique. Why hasn't anyone brought this to the Caribbean? In France, we're importing coffee, from the Middle East and the Indies, and the Dutch have a monopoly on it. Like, why can't we, get this for ourselves? But he seduced a noblewoman who had a weird illness. And that meant that because she was noble, her doctor had access to the Royal Botanical Gardens, where the only coffee tree in all of France was located. Illegally, took a cutting from that tree, smuggled it out of the country onto an ill-fated ship that got attacked by pirates, got in a hurricane, then got caught in the doldrums, ran out of food and water. So he's like sharing his little water ration with his plant. But they're both about to die. They finally make it back to Martinique. He starts planting coffee in his little plantation. It goes great. And instead of making a fortune on this and monopolizing it, he just starts giving it away. He gets sick of the, plantation life and goes back to sea. And he's a sea captain for like the next 40 years. Dies at the age of 87 in France at a time, in the 1700s when people were like living to 30. So to me, it's a great adventure story. It's based on a true story. If you love coffee or you love a good adventure, go check out Coffee Smuggler.
That's really cool. So folks, you got to check that out. That sounds just awesome. Just listening to him tell the story of that book. You got a couple other books too, right?
Yep. I wrote one called Youth Renewing the Countryside. And that was like 15 years ago. And I was, hired as a writer. It was a great breakthrough for me where I didn't have to pitch the book or do anything. I was there, writing about 2/3 of the chapters. I got to travel to each state in the whole U.S. and interview someone from a rural area doing something kind of innovative or creative to rejuvenate, that rural economy. Because, it's been this urbanization trend, rural communities kind of left behind. So it's a fascinating project, a lot of fun. And then most recently, I wrote a novel called Cyberfire, which takes place, in the not too distant future. We've got a record heat wave going across the Southwest, 130-degree heat. and then all of a sudden there's a cyber attack on our transformer system. All the transformers in that whole region go down, power grid goes down, and people are dying of heat stroke. And a team of heroes has to, find out where the hackers are and save the day. So it's a thriller, a lot of sex and violence, not for the young children, but, and it's meant to kind of be a warning of like, I don't think this country has, the right attitude towards cybersecurity. China has 10 times as many people dedicated to cyber warfare, stealing intellectual property, all these different things. And, we're fighting the 20th century's wars. They're in the 21st, second, and third. And I think that, we all need to do better at trying to modernize our infrastructure and make sure that it's not vulnerable to security threats.
That's awesome. So on this whole journey of coffee smuggling books and the Spitting Llama bookstore and all this stuff, what would you say is the biggest internal obstacle you've had to face on your journey?
I would say prejudices and stigmas against what a landlord is or what an entrepreneur or a business person is. And I think it can be anything you make it. You can be as good or as bad as you want to be and still be you. So I think it's been trying to reinvent myself and reimagine myself doing things I never would have imagined doing, but doing them in a way that's still true to myself. So that would be the internal obstacle, I guess, is for all your listeners, like picture yourself doing and really being what it is you want to do and be, and then build the bridge and the pathway to get there. Because if you don't picture yourself as actually living that life, you will never do it. And I think the other thing is just finding team members and people to help me. Because I've just learned that there's certain things I'm bad at, or I'm good at it, but I'm not motivated enough to actually get it done. Just hire that out. I mean, find a partner, find partnerships, build teams for people who can have that accountability and help you, focus on the things you're really good at.
That's good. Thoughts are things. You guys all should listen to Earl Nightingale's little YouTube video there. You'll learn something about it. I believe it's the strangest secret in the world or something like that, but just look it up, Earl Nightingale. You guys will love that. So with that, Dave, it's been great having you on the show. How do people reach out to you? How do they get copies of your book? How do they find more about you?
Books online, anywhere books are sold. You can give me a call, 207-517-5700. My website is holmanhomes.com. That's HOLMANHOMES. And then my email is just dave@holmanhomes.com. And I'd love to hear from any of you. Reach out. Always looking for people to invest with or partner with.
So, that's an interesting thing. Many, many years ago, one of my mentors put his phone number in front of a big class he was teaching. He put his cell phone number up there. And I'm thinking to myself, I'm like, holy crap, I can't believe he just did that. It must not be his number. And then he says, that is my cell phone and I'm going to give it to all of you. And you know what the problem is? None of you will call. And folks, I'm going to wrap this episode up with exactly that. Remember earlier I said it's not about the knowledge, it's about action on knowledge. There you go. He just gave you his phone number. That's the first time somebody's done that in over 100 episodes on this podcast. The question and the challenge to you, pick up the phone, shoot him a text, tell him who you are, where you live, start a conversation. The most successful people are the most available. He just gave you his number, so use it. With that being said, folks, thank you for joining us for another episode of the Real Estate Money School. And Dave, thanks for joining.
Thanks for having me, Chris. Appreciate it.
We'll see you on the next episode, folks.